The world of biotech investing is a wild ride, where fortunes can change in a heartbeat and uncertainty is the only constant. Every day brings a new twist, and investors are always on the lookout for the next big move. Mereo BioPharma's recent stock action is a perfect example of this volatility, capturing the attention of traders and analysts alike. After a turbulent period marked by wild swings and nervous speculation, Mereo's shares finally stabilized at 49 cents in the pre-market. This came right after a dramatic 28% surge the previous Friday, a move that left many wondering what could be driving such a sudden spike. This sudden calm has investors on edge, their nerves frayed as they try to decipher whether this is just a brief pause before another storm, or the first sign of a genuine turnaround for the company. The market is holding its breath, waiting for a catalyst, something that could send the stock soaring again, or plunge it back into uncertainty. Investors are locked in debate. Was the recent jump just a dead cat bounce, a fleeting blip in a downward trend? Or is there something bigger brewing beneath the surface? A fundamental shift that could change Mereo's fortunes for good. All eyes are now turning to the upcoming JPM Healthcare Conference, a high-stakes event that could prove to be a make-or-break moment for Mereo BioPharma. For a small company like Mereo, this event is more than just another date on the calendar. It's a rare and critical opportunity to reset its story, to capture the attention of potential partners, investors, and the wider biotech community. The current price stability is deceptive, reflecting a market in suspense. Bulls and bears are locked in a tense standoff, each side waiting for the first sign of movement. Beneath the surface, the stakes couldn't be higher. Every decision, every announcement could tip the balance one way or the other. The company's future now depends on its ability to convince a skeptical market that it still has value, that its pipeline and vision are worth believing in. The recent surge in share price was just the opening act. The real drama is about to unfold on the conference stage, where every word and every signal will be scrutinized. What happens at the JPM conference will likely decide if Mereo's story becomes one of recovery and renewed hope, or if it slips further into struggle and doubt. The calm before the conference is deceptive. Beneath the quiet, anticipation is building. The real test is about to begin, and the outcome could shape Mereo's destiny for years to come. The JPM Healthcare Conference is the Super Bowl of the biotech world, a high-stakes arena where reputations are made, fortunes are won or lost, and the future of entire companies can change in a single conversation. For biotech companies, this is the most anticipated event of the year, drawing thousands of executives, scientists, and investors from around the globe. From January 12th to 15th, industry leaders and investors converge in San Francisco to make deals, unveil breakthroughs, and set the tone for the year ahead. For Mereo, this is the most important stage it will have all year, a rare opportunity to capture attention and change the narrative. Here, the company can pitch directly to the investors and partners who could shape its future, face-to-face in real time. A strong presentation could reignite interest, attract new funding, and open doors to strategic partnerships. A weak one could close them for good, leaving the company struggling to regain momentum. The spotlight is on CEO Dr. Denise Scott-Knight, who must deliver more than just data. She needs to tell a compelling story that resonates with both skeptics and supporters. She must reframe recent setbacks, highlight pipeline potential, and convince the audience that Mereo's vision is not only possible, but inevitable. Laying out a credible path forward is essential. Every detail matters, from clinical milestones to commercial strategy. Every word and every slide will be scrutinized by analysts, investors, and even competitors, all searching for signs of strength or weakness. The conference is a battleground where narratives are forged, alliances are tested, and futures are decided in real time. For Mereo, it's a shot at redemption, a chance to prove doubters wrong and inspire new confidence. The recent stock surge shows some investors are betting on a comeback, but the pressure is immense and expectations are sky high. The January 14th presentation isn't just an update, it's an audition for survival, a defining moment that could determine the company's fate for years to come. Mereo's future hangs in the balance, as the world watches to see if it can rise to the challenge and seize its moment. Mereo's current crisis began with devastating news in late December, sending shockwaves through the biotech world and leaving employees, investors, and patients in disbelief. The company's lead drug, Setrusumab, failed not just one, but two pivotal phase 3 trials for brittle bone disease, missing its primary goal, reducing fractures in patients who desperately needed hope. The results were a crushing blow to families and clinicians who had pinned their hopes on a breakthrough. Years of painstaking research, millions in investment, and countless hours of work seemed to evaporate overnight, sending the stock into a tailspin and erasing much of the company's market value in a matter of hours. The failure didn't just hurt the drug, it shook the very foundation of Mereo's entire business strategy, raising doubts about its future direction and ability to deliver on its promises. Investors fled in droves, and the company's value plummeted, leaving leadership scrambling to reassure stakeholders and stabilize the situation. The hope for a blockbuster therapy vanished almost instantly, replaced by hard questions about what's left in the pipeline and whether the company can recover from such a major setback. This setback is the dark cloud hanging over Mereo as it heads into the high-stakes JP conference, where the eyes of the industry are watching closely. Management must now convince investors and analysts that Mereo is more than a one-drug story, and that the company still has a future worth believing in. The memory of this failure is painfully fresh, and expectations for the company's next moves have been dramatically reset, with every decision now under intense scrutiny. The upcoming presentation is a critical test of leadership and vision, a moment that will determine whether Mereo can chart a new course, restore confidence, and begin to rebuild what was lost. The fallout from Setrusumab's failure didn't stop with Mereo. Its key partner, Ultragenyx, was also hit hard, as their joint hopes for the drug collapsed. The failed pediatric trial forced Ultragenyx to rethink its investment, straining the partnership. For Mereo, this meant losing not just a drug, but crucial financial support and validation. The biotech ecosystem is interconnected. When one player stumbles, partners feel the pain. The dream of future milestone payments and royalties evaporated overnight. Investors now question the stability of Mereo's other collaborations. The market's reaction was swift and brutal, with analysts reassessing their models. The risks of drug development became painfully clear. For Mereo, the damage to credibility and finances is deep, and recovery will be tough. Wall Street's response was swift and unforgiving. Jefferies downgraded Mereo's stock and slashed its price target from $7 to just 50 cents. This wasn't a minor adjustment, it was a total reassessment of the company's value. The analysts made it clear, Setrusumab's failure wiped out the main reason to own the stock. Now Mereo's future depends on two things: salvaging something from Setrusumab, or landing a partnership for its other asset, alvelestat. The odds are long and the path forward is narrow. Jefferies' report set the tone for investors. Mereo is in survival mode. The company must pivot fast and prove it has a viable plan B. The downgrade crystallized the new reality. Mereo is fighting for its life. The market is watching every move. As the conference approaches, investors have a clear checklist for Mereo. First, what's the plan for Setrusumab? Is there any way to salvage value, or is it time to move on? Second, how will Mereo cut costs and extend its financial runway? Investors want to see discipline and a credible strategy to preserve cash. Third, can the company secure a partnership for alvelestat, its most promising remaining asset? A deal here could provide much-needed cash and shift the narrative. These three pillars, Setrusumab's fate, financial discipline, and alvelestat's future, will determine if Mereo can recover. Investors are desperate for answers. The company's next moves are critical. With Setrusumab sidelined, all eyes are on alvelestat. This oral drug targets a severe lung disease, alpha-1 antitrypsin deficiency, and has shown encouraging phase 2 data. While not yet proven to improve lung function, the biomarker results are promising. Alvelestat is now Mereo's best shot at creating value, but advancing to phase 3 is expensive. Mereo needs a big pharma partner. The JP conference is the perfect venue to spark those discussions. Even a hint of progress on a partnership could send the stock soaring. Investors are pinning their hopes on alvelestat. It's no longer just another pipeline drug, it's the company's lifeline. The stakes couldn't be higher. Despite a glimmer of hope, Mereo's path forward is fraught with risk, the biggest threat. If management can't spin the Setrusumab data or impress with a new plan, hope could vanish fast. Alvelestat's promise is real, but there's no guarantee it will attract a partner or succeed in late-stage trials. Financial risk looms large. Without a deal, Mereo may have to raise cash by diluting shareholders. The clock is ticking on its reserves. Execution risk is huge. Management must juggle damage control, cost cuts, and deal-making, all at once. Any misstep could be fatal. The company's future depends on flawless execution. The downside is steep if they fail. Mereo is walking a tightrope. The next few weeks are make or break for Mereo BioPharma. The company stands at a crossroads, between the wreckage of failure and the hope of a turnaround. Investors are waiting for answers at the JP Morgan Healthcare Conference. CEO Dr. Denise Scott's-Knight must deliver a new, convincing investment thesis. She needs to address Setrusumab's failure head-on and pivot to Alvelestat's potential. A credible financial plan is essential. If the presentation hits the right notes, it could spark a real recovery and restore confidence. But if it falls flat, the consequences could be devastating. The conference is the courtroom, and investors are the jury. January 14th is the closing argument. Mereo's future will be decided on that stage.